Good morning, student. Today I am present with my lecture number 13A, Accountancy for Standard 11th, and chapter is Origin of Transactions. Under this chapter, we will study about source document of accountancy, voucher, meaning of voucher, types of voucher, and preparation of voucher. So first I explain about what is origin of transactions. Various transactions are made in the business every day, such as purchase and sale of goods and services, receipt or payment of cash, and so on. Each business transactions should be supported by documentary evidence such as cash memo, cash receipt, invoice or bill, debit and credit notes, pay-in slip, check, etc. These business documents are called source document. So now topic is source document documents of accountancy. Source documents of accountancy. These documents are the first record about the detail of a business transactions. Such documents report the date, the amount, parties involved, and nature of the transactions. Entries in the books are always made from the source document. According to the verifiable objective principle of accounting, each transaction recorded in the books of accounts should have adequate proof to support it. These documents are the written and authentic proof of the correctness of the record transaction. These documents are required for audit and tax assessment. They also serve as the legal evidence in case of a dispute. There are most common source document. First, cash memo. Cash memo is a source document when a trader sells goods for cash. He gives a cash memo, and when he purchases goods for cash, he receives a cash memo. Detail regarding the item quantity, its content, item, quantity, rate, and total price, etc. Cash transactions are recorded in the books of accounts on the basis of these cash memos. Now, next source documents are invoice or bill. Invoice or bill. When a trader sells goods on credit, he prepares a sale invoice. In case of credit sale, he prepared a sale invoice which contains the name of party, to whom goods are sold, the rate, item, quantity, and total price of total amount of sale. The original copy of the sale invoice is sent to the purchaser, and its duplicate copy is kept for making records in our books of accounts. Similarly, when a trader purchases goods on credit, he receives a credit bill from the suppliers of goods. We make an invoice on credit sale but receive a bill on credit purchase, though the two terms are used synonymously and means the same thing. Now, next point is receipt. When a trader receives cash from a customer, he issues a receipt containing the date, amount, and name of customer. The original copy of the receipt is given to the customer and its duplicate copy is kept for making record in the books of account. In the same way, whenever we make payment, we obtain a receipt from the party to whom we make payment. Now, next source document is Debit Note. When we return goods to supplier, we prepare a debit note. Returns goods to a supplier. We make debit note. Debit note is a document which indicates that supplier's account is being debited. It is a source document which contains the date of transactions, name of accounts which is debited, the amount, and the reasons for debit. A duplicate copy or the counterfile of the debit note is retained by us, on the basis of which the supplier's account is debited in our books. Now, next source document is credit note. Credit note is just opposite to debit note. Return when goods are received back from customer. When goods received back from customers, a credit note is sent to him indicating that the customer's account has been credited in our books. A duplicate copy of the credit notes is retained for record purpose. That means it is also known as sales returns, and this is purchase return. Debit note means purchase returns. Now, next point is pay in slip. Pay in slip. This is a form available from a bank. This pay in slip is related to bank. This is a form available from a bank and is used to deposit money. Deposit money in the bank. When we are going to deposit some money in bank, we have to use first pay in slip, and which is returned to the depositor duly stamped and signed by the cashier of the bank. Next point is check. We all know about check because each and every family have a bank account, and bank issue a check to his customer for withdraw money from bank. A check is an order in writing drawn upon a bank to pay a specified sum to the bearer or the person named in it, means named in check. Each check has a counterfoil in which the same detail as entered in the check are filled. The counterfoil remains with the account holder for future reference. Now, I once again repeat all the source document. Cash memo is for cash purchase and cash sale. Invoice or bill is prepared for credit sale and credit purchase. Receipt is prepared for when cash received from customer and cash paid to supplier. Debit notes is prepared for purchase return. That means when we return goods to supplier. And credit note is prepared for received back from customer. That means sales return, when we goods sold to customer and customer return the goods back, then we will prepare credit note. Pay in slip is used for deposit money in bank account, and check is an order to withdraw money from bank. Check is an order in writing drawn upon a bank to pay the specified sum to the bearer or the person named it. So these are the source document. Now next thing is voucher. On the basis of source document, entries are first of all recorded on voucher, and then on the basis of voucher recording is made in the journal or anything journal. Vouchers are printed separately by all the firms in their own names. A separate voucher is prepared for each transaction, and it specifies the accounts to be debited and credited. Voucher is prepared by an accountant, and each voucher is countersigned by an authorized person of the firm. Now I am going to differentiate between source document and voucher. Source document supported to the voucher. Source document supported to the voucher. Voucher is supported by source document, supported to the voucher, and supported by source document. Voucher is supported by source document, but source document supported to voucher. Next difference is it is not prepared to record transaction. Source document is not prepared to record transactions, but voucher is prepared to recording transactions. Source document contains full detail of the transactions. Source document contains full details. But voucher puts emphasis on which account is to be debited and which account is to be credited. And source document is evidence of the transactions. It is evidence of the transactions. But voucher is document of correct recording of transaction. It is a correct recording of transaction. So these are the difference between voucher and source document. Now there are type of voucher. Types of voucher. Types of voucher. There are two types, mainly cash voucher and non-cash vouchers. Non-cash or transfer voucher. Non-cash vouchers and transfer voucher. Cash vouchers are also two types. First is debit voucher. Debit voucher for cash payment, and second is credit voucher for cash receipt. Now I am going to explain about cash voucher. Cash voucher. Cash voucher are prepared for cash transaction, that is cash receipt and cash payment. These are two types. I have explained about debit voucher and credit voucher. Debit voucher and credit voucher. Debit voucher are prepared for transactions involving cash payment. Cash payment. For example, cash payment for expenses, cash payment for rent, salary, etc., cash purchase of goods, cash purchase of investment, cash payment to creditor, even cash deposited in bank. So cash voucher is prepared for cash payment. It contains usually its content, date of preparing voucher, serial number, name of account debited, brief explanation of the transactions together with necessary details, net amount of transaction, net amount of transactions, source document number, say cash memo number. In case of source document is not available for a transaction, the receipt portion of the debit voucher is filled and is used as source document. If the net amount of debit voucher is 5,000 or more, a revenue stamp of ₹1 is affixed and the signature of the person receiving the payment are obtained across the revenue stamp. Now just opposite credit voucher. Credit voucher is prepared for cash receipt. Cash receipt. For example, cash sale of goods, cash sale of investment, cash received from commission, cash received from interest, etc. Usually, the information of credit voucher is same that in debit voucher. Credit voucher also contains date of preparing voucher, serial number of preparing voucher, name of account credited, net amount, and source document number, say cash memo number, etc. Now next point is non-cash voucher. Non-cash voucher or transfer vouchers. Non-cash vouchers and transfer vouchers. These vouchers are prepared for non-cash transactions such as credit purchase or credit sales of goods. For credit purchase and credit sale of investment, fixed assets, etc., providing depreciation. Hence, we can say that credit non-cash vouchers or transfer vouchers are prepared for non-cash item which cash is not involved in this. It usually contains same as debit voucher and credit voucher, date, serial number, etc. Now last thing is compound voucher. Compound voucher is a document showing a transactions that contains multiple debit and one credit, or which contains multiple credit and one debit is called compound voucher. Thus, a compound voucher may be two types: debit voucher and credit voucher. Debit voucher, a document showing a transaction that contains multiple debit and one credit. But credit voucher, a document showing transactions that contains multiple credit and one debit. So this was the origin of transaction. This is the last point. Thank you. I will meet you in next video with some next topic. Thank you very much.